Hey guys, welcome back to Everything Money. Our subscriber list is growing exponentially. It's a growth stock, Paul, this company.
Everybody keeps saying that in the chats. They're like, EM's a growth, it's the moon.
We welcome you back into Everything Money. Your Uncle Paul is here to teach you more about the 8 pillars of investing in a stock, learning about the company using actual financial numbers. And we have some sneak peeks to show you this week with the software we're putting out. GM is an amazing company. They've been around for a long time, and recently their stock has spiked, and we've gotten a lot of requests both in the YouTube comments and on our Patreon, which is filling up dramatically, Paul. And we are going to use our 8-pillar analysis to look at GM right now, look at the financial health of the company and whether this rise in stock price is mandated with some positive information in their financials. So I present to you the seer of seers, the prognosticator of prognosticators, because it's Groundhog Day, Paul
it's funny,
Gabrielle.
I thought about it last night. I'm like, are we going to do something Groundhog Day related for today? So now you'll know when we recorded this video, because it is Groundhog Day today.
I was watching this movie a long time. Now it's gotten mainstream now. Everybody loves this movie, but I've been obviously a huge fan of Bill Murray.
Prognosticator of prognosticators.
That's you, the seer of seers. So we're going to use our 8-pillar analysis to look at GM right now. Paul, welcome in.
Can you do me a favor?
Go on.
Sing me the song, of course, on the alarm that goes off every morning.
I Got You, Babe by Sonny and Cher.
Okay. Then tell me the lines that happen afterwards by the people.
Oh, see, Paul, I'm trying to do a GM video.
Okay, we'll do the show.
I'll get to it in a minute.
Guys, GM.
What is the market cap of GM, baby?
So first off, I want to talk about what we're going to look at here. We're going to look at the 8 pillars. The 8 pillars are a 500-foot view of every company. It is not in-depth. When you come in the comments below and say, well, you're missing this, I'm only doing a 500-foot view because my goal is to use the 8 pillars to screen what I'm looking for and to tell me what questions to ask next. Okay, so that is part of the job afterwards, to do more due diligence and more in-depth analysis.
Paul is looking at Y charts right now, which he pays $500 a month.
$500 a month, and we're going to tell you how you can get this for a lot lower than $500 a month, $12 a month here.
We'll
tell you that when it's done.
Yeah, stay tuned. Keep going, Paul.
$75 billion market cap. Okay,
Nice.
How many times has GM gone bankrupt in this history, by the way?
I have no idea.
I mean, I don't remember, but okay, PE ratio, 23.6.
A little high.
So an X off the bat. Profit margin, though, last quarter was high, but I'm not going to count this one.
Why is that?
Because if you look at the last 12 months, it was only about 2% or so. So that's an X right there.
We're looking for 10%.
We're looking for 10%. Gross margin, 17%, which seems about right for a car business. Now, one thing I want to show here. So we have 2 X's so far. They used to have a dividend. They stopped the dividend. Probably when COVID hit, they need to reserve their cash, so they stopped that dividend. I don't like that, but I understand it happens.
Pillar number 3 is revenue growth over the past 5 years, Paul. Revenue growth.
Okay, revenue growth the last 5 years. Ready? 135 to 137. Now, the great thing about our software that's going to be different, it's only showing the last full year. Ours are going to go for the previous 4-month clumps. So it'll be 4 quarters at a time. So we'll show the last year as the last 4 quarters, which would be much better. So this is a check mark, very minor check mark, because as you can see, it's the 2 lowest years of revenue in the last 10.
How about profit growth is pillar number 4, Paul. Profit growth.
Let's see if government motors can make money. 9.7 billion to 6.7 billion. That's an X. All right, a loss in the middle here, so it's still an X. We have 1 check so far, and it was barely a check.
Pillar number 5 is shares outstanding. We want this number going down.
1.59, 1.42. Check mark there.
Nice, it is going down. They're buying back shares. Current assets over current liabilities is our infamous pillar number 6, Paul.
So this is, the current assets is basically cash on hand. It has inventory in there, but it's things that can be readily changed to cash very quickly. $89 billion. And their current liabilities, the debts on hand, 80.6. So it's a check mark there, fortunately.
80.6, check mark. That's 3 checks, 3 X's. The granddaddy of them all is pillar number 7, which is free cash flow
What are the 3 checks?
growth. We have
revenue growth, share
shares,
discount. There you go.
And current assets over liabilities.
Now, guys, free cash flow
growth. This is cash from operations minus capital expenditures, Paul.
What is free cash flow stuff?
Well, I was hoping you weren't going to ask me, but free cash flow is the cash they have they can make acquisitions with. They pay their dividend out, and I'm assuming it's not doing well because if they've taken away that dividend, which most people don't even know, like myself, I didn't know that they could take away that. Because the dividend is not set in stone, but free cash flow is going to, what other things can they do with it? You tell me.
Buy back shares.
Of course.
So that's a big thing. So when you look at a company buying back shares and paying dividends, and again, GM used to pay dividend and they stopped it. We're going to look at the last full year here for 2019, and then we're going to look at the last 12 months. But the free cash flow is, I think, more important to look at the net income because it's actually cash in and cash out as opposed to net income. Has a bunch of accounting rules and IRS rules in there and it can be manipulated a little bit easier than free cash flow. Okay, guys, so free cash flow. Negative 10 billion.
Oh boy.
To negative 9 billion. So it's a check because
they're losing less money.
They're losing less cash flow. But guys, there's no metric here. It's every year has negative cash flow. I'm not even looking at this. First off, I have so many problems with the car industry in terms of, I know I'm going to get a lot of hate out there. The unions, I don't think it's a long-term plan that will work to pay a janitor $100,000+ a year to be a janitor. More power to that janitor for taking their money when they can. But in terms of long-term stability of a company, it doesn't work. This free cash flow is insane. They haven't had free cash flow since 2013. I mean, what are we doing here? Let's look at the last year. Maybe it's better in the last year. But first off, there's no free cash flow ratio because every year is a negative. So we can't have a free cash flow ratio. For the trailing 12 months, nope, they lost $7 billion in free cash flow on the nose. So right here, negative $7 billion. It's cash from operations less the absolute value of the capital expenditures because it's a number. So it's either plus a negative number, whatever. The bottom line is they don't make free cash flow. I don't know how they're buying back dividends. I don't know how they're, buying back shares. I don't know how they're paying a dividend. So this is awesome. Now let me show you our site. This is our website, the Everything Money app website. General Motors, in the house. You can get all this information. We're going to add more key stats here, key metrics. You have your income statement, quarterly, annually, whatever you want, balance sheet, cash flow statement, and our granddaddy pillars of them all.
What Paul is showing.
That's an error right there. Look, I found an error in the price of free cash flow.
This is a beta version while Paul's showing it.
It is. We're going to be doing a lot of things here, but the bottom line is this is terrible.
We get a lot of questions about where to find this information, whether it's wide charts I don't want to pay. We're normal people like yourself. Where would you find this? Yahoo Finance, Google Finance, and a lot of that is actually starting to charge you as well. So what Paul came up with is if we can develop a software to give to our patrons that replaces wide charts, an in-depth look using our pillars, using real-time stats. This is what, if patrons, you know exactly what we're talking about. It's coming out in April, and you've been asking for it for a long time, and this is incredible, Paul, just to see it in real life.
But right now, this is software that with all the additions, I'm going to value it over $50 per month. If you sign up for the Patreon now, any level gets you it, even the $12 level. We had an $8 level. It sold out very quickly. $12 level, when it's sold out, it's going to $15 or $16, and it's going to keep going higher until it gets up to $50. So if you sign up for the $12 level, whatever we add is you're still going to have $12, and it's only going to increase minorly for cost of living and all that stuff, extra costs. It will not go up with the Patreon levels.
What's your final take on GM, Paul?
I'm avoiding it. Too many issues there. I think there's plenty of other stocks to look at to buy. Now, again, this is based on fundamentals. Trader Mo, he's going to look at some point at these charts and see if there's a way to trade the stock to make money. Because in the short run, stocks are a voting machine. In the long run, it's a weighing machine. I look at the long-term weighing machine or the momentum, and we'll get into momentum a little bit later.
So why is the stock price rising? And who is interested in buying this at the moment?
Same reason why stocks are up 80% since a national economic emergency and shutdown. Makes no sense to me.
Makes no sense. If you're interested in momentum and day trading, Trader Mo is another wonderful character on our show here, and he goes over the stock charts, daily trades. He'll be on our live streams on Tuesdays and Thursdays at 1 p.m. Eastern, and you can always ask him questions in the mid-level Patreon tier. Paul, final question I have as a normal person is what companies, if you have money and you're interested in car companies, which ones are you in love with? And I think the answer is...
I think we looked at it a while back. I liked looking at Toyota and Honda. I think they had very good financials there. I think Volkswagen was decent. We have a video in the past, a live stream where we did car companies. Mm-hmm. But Toyota and Honda, they have way better ratios and way better, cash flow and things like that. We can look up let's look up Toyota right now in terms of do they have free cash flow at all. So let's look up Toyota. You asked for it?
You got it.
Toyota. So in the last 12 months, Toyota's free cash flow, they don't even have free cash flow. They barely have free. The car business in general is so hard. Mm-hmm. To me, I'm like, man, it's such a tough business.
Yeah.
Such a tough business. Why? Find another company that has better margin, has less issues with labor, all these things. Just go find a better company. That's my thought.
And that's what we're doing on this show, is finding undervalued, underpriced companies using our 8 pillars. And a lot of times, some of the best companies we've found over the past couple of years, neither of us has even ever heard of. And they're brought in on our live streams from people all over the world. So if you follow along, you can find undervalued companies instead of overvalued hype companies to put your money in. Yeah, make sure you guys give that thumbs up a tickle and a thumbs down if you don't like us. By
the way, we're okay with the thumbs down, but just give us that tells us also what people like and dislike. So, don't go overboard on the thumbs down. But at the same point, give us your honest opinion. We'll take it, and we'll go from there.
Thanks, everybody, for watching. Make sure you subscribe and check out our live streams. We'll see you on Patreon. Love you.